Buying your first home is an exciting time, but it is also a time that can be quite overwhelming. Knowing where to start and what is required financially can be quite a lot to get your head around. Financially, the deposit is fundamentally where the home buying journey begins and one of the main focuses for anyone at the start of their home buying journey. In today's video, I'll be looking at what the deposit requirements are in New Zealand for 2024. If you are a first home buyer with questions around deposit requirements here in New Zealand, then you've come to the right place. Whether you're dreaming of buying a cozy apartment or a spacious house, understanding the deposit requirements is a key step in the home buying journey. Today's video will cover what a deposit is and why it's important. We'll also look at what your deposit can be made up of and what the deposit requirements are in 2024 here in New Zealand. I'll also cover information for low equity borrowers or people with low deposits, touch on the first home loan scheme, and also share some tips on how to build your deposit, so make sure that you stick around to the end. As always, feel free to skip around the timestamps to save time. Let's get into it. Before we dive into the specifics, let's first understand why having a deposit is so important and what a deposit actually is. In a nutshell, the deposit is a significant upfront sum that you pay towards the total purchase price of your new home. Why it's important is that it not only reduces the loan amount that you'll need to purchase the home, but it also shows financial strength to the lenders. Your deposit can be made up of many different sources. One of these could be money that you've saved up yourself. Good financial habits can go a long way for building the bank's trust when they're looking to give you a loan. The lenders generally want to see that you've saved at least 5% of the deposit yourself. This could also be from your KiwiSaver. So if you're eligible, you could withdraw your KiwiSaver minus the $1,000 that's required to stay in there. If you are eligible to withdraw it, you can withdraw everything else, all of your own contributions, all of your employer contributions, and also all of the government contributions. If you have shares in a share portfolio that you're willing to cash out, these can also be used towards your deposit. You don't necessarily need to cash these out and withdraw them before your application. However, providing some sort of a statement showing how much you've got in shares that you can use towards your deposit usually is sufficient for your application. If you're lucky enough, you might also receive some gifted funds from parents or family members that could be used towards your deposit. They don't necessarily need to have provided the funds before your application into your bank account. Usually what the lenders require is some sort of gifting declaration to be signed, showing that they will be gifting you the funds and outlining how much you'll be receiving. For gifted funds, it does need to be stated that it is a gift and is not a loan. If it is a loan, then a clear agreement needs to be in place with terms set out, and this will need to be provided to the lender as part of your application. In New Zealand at the moment, there is also the First Home Grant, which is available. If you're eligible, you could get up to $5,000 per person to purchase an existing property, or up to $10,000 per person to purchase a new build property. I have a whole video covering everything that you need to know about the First Home Grant, which I'll link up over here, and I'll also pop a link down in the description if you'd like to check that out for some more information. So now let's get into what the deposit requirements in New Zealand are for 2024. The ideal deposit for buying your first home sits at 20% at the moment. However, in most cases, the minimum requirement is 10%, and in some cases, only 5% is required. By the way, if you're enjoying this video, don't forget to like and subscribe. If you have less than 20% deposit, then you're referred to as what is called a low equity borrower. And the low equity borrowers have different criteria that needs to be met as opposed to someone who has 20% deposit. If you fall into this category of being a low equity borrower, then what is called a low equity premium or a low equity margin is charged. What this means is that you'll have to pay a one-off low equity premium to the lender, or a low equity margin is added to your interest rate, which can later be removed when you've reached that 20% equity. For example, let's say the standard interest rate is 6% and you've only got a 17% deposit. So for you, your interest rate is going to have that low equity margin added. So your interest rate will sit at 6.3%, for example. Once you've built your equity to that 20% requirement, then you can look to get that 0.3% removed and have the standard interest rate of 6% applied. The exact margin that gets added varies a little bit between lenders, and also depends on how much deposit you've got. So it's best to chat with your mortgage advisor to find out who the best lender might be for you if you are a low equity borrower. Previously, the banks were very hesitant to lend to anyone who had less than 20% deposit. However, in June 2023, the LVR rules changed and banks could now allocate up to 15% of their funds for low deposit borrowers. Having a higher income if you are a low equity borrower does improve your chances of getting your application approved. However, you would need to explain to the lenders why you haven't been able to save more money towards your deposit. And this could be for a number of reasons, such as you've been focusing on paying down debt, for example. Now let's dive into the first home loan scheme. Kāinga Ora administers the first home loan here in New Zealand. It's an excellent option for eligible buyers and a great way to get more Kiwis into their first homes. To be eligible, you'll need to meet a few criteria. You'll need to have at least a 5% deposit of the house that you're looking to buy. You'll also need to fall within the income criteria. This means that you have to have a before income tax from the last 12 months of $95,000 or less for an individual buyer without dependents, or $150,000 or less for an individual buyer with one or more dependents, or $150,000 or less combined for two or more buyers, regardless of the number of dependents. You'll also need to be a New Zealand citizen, permanent resident, or a resident visa holder who ordinarily resides in New Zealand. You also need to be a first home buyer or a previous homeowner who is in a similar financial position to a first home buyer. In addition to this, there are other criteria that need to be met. This is that you need to be purchasing a home for you to live in as your primary place of residence, not own any other property or land. This does not include ownership of Maori land. And you need to be purchasing a property of less than 1 hectare, and you may need to pay a 0.5% lender's mortgage insurance premium and loan application fee if this is applied by the lender. First home loans are issued by selected banks and other lenders and underwritten by Kāinga Ora. This allows the lender to provide loans that would usually sit outside their standard lending criteria. What this means is that you also need to meet the bank or lender's criteria to service a home loan. Banks and lenders have their own criteria that they assess you on as part of their lending processes. This can include your financial ability to repay your loan, your current debt levels, and also your credit history. If you're interested in the first home loan scheme, then make sure you discuss your requirements and your individual circumstances with your mortgage advisor. More information about the first home loan can be found on Kāinga Ora's website, which I'll link down in the description box. The last thing I want to talk about today is tips to build your deposit. There are some really good ways that you can look to build your deposit fast. The first way is one of my favorites, and this is by automating your savings to come out of your bank account and move into a savings account as soon as you get paid. This is a great hack to put your deposit away and save it before you even see the money in your bank account. My second favorite way of building your deposit fast is by upping your KiwiSaver contributions. KiwiSaver contributions are taken out before your pay even hits your bank account, so it's an automatic way to set up your savings. At the moment, the minimum contribution required amount is 3%, but you can contribute 4%, 6%, 8%, or even 10%. You also get your employer match, which is generally around 3%, although some employers do match a little bit higher. And you also can be eligible for the government contribution if you make the right level of contributions. By upping your KiwiSaver contributions from even 3% to 4%, it can make a huge difference to building your deposit faster. Also, making sure that your KiwiSaver is in the right fund type for your goals is crucial. I have a whole other video all about the common KiwiSaver mistakes that people are making every day and how to fix them, which is coming up next.